payments are no longer the frontier. They are table stakes. Across Asia, businesses can move money in seconds, but is speed the end game or just the beginning? Today, smart rails are transforming into smart platforms where payments don't just move money. They trigger lending decisions, embed insurance products, split revenue in real time, and potentially power entire marketplaces. But can this next payment stack turn a cost center into a revenue engine? That is one of the questions we are trying to answer today. Can programmability, APIs, smart rules, and embedded logic unlock real monetization opportunities in the next generation of payments? We would like to welcome Kanupriya Sharda, Chief Business Officer at TazzaPay, and Abhishek Padhy, Head of Product Payments and FX at Aspire, to the Asia Tech Podcast to help us unpack all of this and more. Thank you both for coming to the show. How are you doing today?
Hi, Michael. Thanks for having me.
Hello, Michael. Hi, Kanu. Nice to be here.
It's great to have both of you. Okay, let's just jump right into this. We talked about instant payment, how instant payments are table stakes. And if they are, what's the next unfair advantage? Is it distribution? Is it data? Is it programmability? Or is it something else that we haven't considered? And Kanupriya, let's start with you first, if that's okay.
So I think this is a really good point, and I know that everybody is saying real-time payments is table stakes, but let's take a step back here. So yes, real-time payments are real in domestic markets, especially in Asia. But when you look at the West, like it's not happening in the US even today. And then you take another step back where we operate cross-border business, it's actually hardly real time because of a few reasons, right? First, all these local rails, which are actually real time, have very small limits. For example, Fast in Singapore is probably the largest limit, which is still only $200,000, which is not enough for real B2B transactions.
Yeah,
B2B transactions start there. And then you look
maybe.
yeah, exactly. So you look at UPI in India, it's much smaller. You go to PromptPay in Thailand, $60,000, right? So it's smaller and smaller. So it sounds like, yay, you can send money real time, but you really can't. And then the second issue is pre-funding, right? So today, most of these fintechs or banks who are saying we can deliver cross-border payments real time, what they essentially do is they hold local liquidity pools in each of these markets. So you want to send money from Brazil to Hong Kong, you collect Brazilian reals, and then you have HKD sitting in Hong Kong and you release it. So now what happens? You go online, you want to send $10,000? Yes, can do real time. You want to send $1 million? Sorry, T plus one. So it's not happening, right? But this is exactly where the first part of stable coins or digital currency comes in. And that's where TazzaPay is trying to build, where we actually really move the money real time. So when I collect the Brazilian real and someone wants to send, let's say, $10 million, then I will instantly on ramp it to USDC, USDT, or any other stable coin and off ramp it in Hong Kong and pay it out, right? So that's the first part that we're trying to change. But that is still in its infancy, if you ask me, because after I off ramp, I still need the last mile to work. And that's where we are figuring out with banks, with regulators, with compliance people, how to make this happen, right? So, yes, we can talk about the next stage, but what I want to say is real time is still not real time. But if you ask me, the three things that customer needs after real time is certainty, which also digital currency is driving. So, when this user in Brazil sends the money, they want to know at every stage where it is. And that's where these local last mile real time infra becomes quite important because when I collect it in Brazil, they can see they have a real balance in TazzaPay. Then when I'm moving it, the whole time I keep them informed. So certainty. And then while the customer wants real time and certainty, the ecosystem, the financial ecosystem, the regulators, the banks, they want transparency. Without it, because you can build all the best data, programmable money, but a single compliance check at a single point in the whole system can still cause it to get stuck. So until you create transparency, so no regulator, no bank, no financial institution in the middle blocks it, it's still not going to work. So these three things are hardly solved. So, which is the main, which is 98% of money movement. What we are talking about, programmability, data driven, that's like maybe a total of $1 billion in a $200 trillion cross-border money movement.
It's yeah. You don't even have to be that smart to do that math, but I understand. It's like a drop in the bucket. Abhishek, do you want to add anything to that?
Yeah, no, I think I completely agree with Kanu. So, real time, instant rails have been there for what now, 15 years or so, in various markets, right? I think some of the European markets have been at the forefront of this, like the FPS in the UK, and even the limits have gradually increased. I think it's now a million GBP for faster payments in the UK. But still, like for business transactions, that's not enough, right? And like Kanu said, most of it is still happening through the Swift network.
Yep.
Even if you were to somehow smartly split your payments and make 5 instant payments, right, for a 5 million, let's say, dollar transaction, even then there are a lot of checks and balances, so you can't split invoices because there are regulatory concerns and so on, right? And then the liquidity problem is never solved because you still need to maintain that pre-fund in that market. Only then those funds can be released immediately. The real money movement never happens instantly anyway. And completely agree that stable coins are changing that landscape, but the liquidity problem still remains, right? You need to off ramp in that market, so you need to have multiple providers, have that local currency with you to facilitate that last mile. But yeah, I mean, things are evolving pretty quickly. I think just on the programmable part, right?
Go
I
ahead.
think one of the sort of misconception that people have is programmable money is all on the blockchain, CBDC, and like stable coin payments. But I don't think that's the true sort of programmable money, right? I think in fact a lot of fiat money is already programmable, right? I'll give you an example,
Please.
like a lot of payroll that happens, for example, like a very
Yeah.
simple example, it is programmable to a large extent, right? So you have a system that determines that, okay, I need to check my HR management system, who are the employees who have completed this month's tenure till this date, how many leaves have they taken or whatever. The performance system, if there is like a component related to performance, they check the taxation system in every market that I need to pay. They can have smart rules around what sort of FX conversion should I do, and then you release the payment based on these conditions. So there's no human doing all of this, right? These rules are set, the program is already built in, and you just release the funds, right? So it's already happening to a large extent. We just don't see it that way because we think some of these transactions are like just there for ages, so they are like being done manually one by one, right? But there is a lot of software layer on top of regular fiat movement that is being abstracted out of the payment. So payments are under the hood the same, but you put that intelligence layer on top of it, and even the fiat money movement can be quite programmable, right? And there are a lot of other examples that I can quote, but I think a simple payroll example is something that everybody can relate to.
Got it. You have raised, both of you have just raised so many questions for me. Hopefully you don't mind. I want to go back and cover some of these things. I had not considered the fact, because I'm not making payments of $200,000 or $300,000 or $1 million, right? The business that people run, or even in their day-to-day lives, most people are making like a $50 payment or a $100 payment, or they're paying for dinner, right? Or they're buying some wine for their friends or a birthday present. Why are the limits so low right now on some of these payment rails, and what has to change to make them higher? And I guess the other question is, and either one of you can jump in and answer this. And I guess the other question is, shouldn't there be like two lanes here? One for individuals that are just so that you don't make a mistake, right? Like I don't want to accidentally put in 200 grand. That's a bad thing because getting that money back could be impossible. But then if I'm a business, shouldn't there be like a special lane for businesses where I could do 10, 20, $30 million, right? Like if I'm procuring things, I'm an automobile company, if I'm an airline and I'm buying like a plane, I just want to make a digital payment for it. That could be $1 billion. Why am I having to do it in 50 separate things? Like, why are the limits so low, and why aren't they bifurcated or trifurcated as necessary?
I think that's a really good question. And the simple answer is money laundering risks. That's like the crux of it all, right?
Can,
So
can I can I jump in just for a second? Sorry, because this is something that's really near and dear to my heart in a bad way. How much money laundering is really going on in the world? Because again, when I was sitting on a trading desk, we had to do KYC, right? Every time we had a new client, we had to do KYC and do AML. And I know that there's money laundering going on out there. I can see it actually day to day. But like, you mentioned before, in a $200 trillion economy, $1 billion is not that much money. do we know like factually how much AML, I mean, money laundering is actually going on? And if we don't know, it's fine. But I'm just curious, like, why that's such a big deal.
Yeah, I don't think I can put a number to it, and I don't
That's
think these
fine.
are figures that are openly disclosed. But I guess
Yeah.
the issue there
Yep.
is that even a small amount can lead to disastrous results sometimes. Like, what if it leads to some kind of terrorist financing, which leads
Yep.
to human deaths, right? So then it's not a matter of quantum. So we have to basically, as players of financial ecosystem, think even like a few $1 million of money laundering could have pretty bad results, right? If it leads to something disastrous. So that's what regulators are trying to control most of the times. And
Go ahead.
and obviously with large value transactions, today the only real channel to move them, which is used, is the Swift network, which Abhishek was
Yep.
saying. And that has a lot of checks and balances, right? So there's millions of compliance monitoring rules, transaction monitoring, and every time it goes through the correspondent banking system, every bank's compliance team looks at it, asks questions, and they have
Yep.
the option to hold the payment. It will not instantly get released. Any bank anywhere feels there's a risk, they will pause it, ask questions. If they're not satisfied, they can return the money. So that's how the system works. So that's one of the reasons. And I think this can change with AI today. So, like, I'll tell
Yeah.
you one of the things we've done at Pay, right? Which we,
Go ahead.
so a typical example of a large value transaction is that a bank or a financial institution only knows one side of the player, right? So, let's say the sending business is my customer. I do KYC, KYB, understand what their business model is, and then they
Yep.
decide to send $10 million to a supplier in another country, China, India, wherever, right? Now, nobody knows who that beneficiary is. It's just a bank account number with some details. And
So,
we don't
but
do KYB
can
on
I
the beneficiary.
can I ask another question? And again, it's not on you guys. Like, I'm just curious about this stuff. The person, the bank that's making, or the correspondence bank that's making that payment to, like you said, to that supplier, they don't necessarily know who that other party is. But at some level, whoever's allowed that payment to get made on the other side, who's allowed that person to be a client, also have to have done some KYC, KYB,
Yes. So
and AML tests on that, right?
let me explain that, right?
Sorry.
So
Thank you.
I'll with my example, you will understand. So what
Thank you.
we've done is we've built an AI model which looks at the beneficiary details. So we have the company name, address, and bank details, right? Based on that, we do about 200 parameter research. The AI model goes to the web and looks at their history, how long they've been in
Wow.
business, trade, if it's an goods, physical goods on one side, then the shipment history, etc., 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 online reviews, website, Alibaba page, so on. So few hundred parameters, and then we determine who the beneficiary is and what is the risk score, right? So what is the industry of the beneficiary? So that's something the AI model determines. Then it looks at the sender and the receiver and decides whether it makes sense for this transaction to happen. Now, for example, if a consulting company is sending $10 million to another consulting company, it will probably get blocked because that is a typical layering strategy where, for money laundering, they will create multiple shell companies, create some kind of
Yep.
history, and then send this money around. So when this consulting company onboarded with a bank, they created some kind of a business and got okay. This consulting company in another country was okay. But when these movements start, then you realize something's going on. On the other hand, if it's like a legitimate business paying a consulting company for some project, it will go through, right? So this is the intelligence that we can start adding. And once this kind of transparency is available, right? So right now we are testing these models, and I think we are at 90-95% accuracy, and we've been displaying it to MAS, other banks, etc. But I think with AI, this has real scope to get unlocked, and limits can increase, and real time can actually happen where we feel confident, banks feel confident to participate in the real time movement because there is enough AI, enough intelligence to understand the business rationale, and AML risks go away.
Got it. Abhishek, do you want to comment on this as well? Because here's the other thing that I'm thinking. If this payment does not get allowed to go through, right? And you said the numbers, if you're using this artificial intelligence test that you guys have built, it can get like 90-something% of these right. But for those other 7 or 8%, let's say, or 5 or 6%, some of those are still probably valid payments. What is the resolution process that you have to go through? Because here's the thing, like I've been doing a lot of work and I've been talking a lot actually on some of my other shows about where artificial intelligence comes in and where it not replaces humans, but kind of superpowers them. But when you're talking about agentic AI can do a whole bunch of things that humans can't do, and it can do it at scale. But you can't replace everybody with them, right? Because then when you have these things that don't get through but should be resolved, that's going to have to get done by a human as well, no?
Yeah. No, I absolutely. I think just taking like a step back, right? So I think the fundamental challenge every player in the industry, be it banks, fintechs, payment service providers,
Yep.
the challenge that they face is how do I optimize for customer experience, but also meet my regulatory obligations, but ensure that the customer doesn't go through a fraudulent sort of experience, right?
Yep.
Because if you ask any customer, they would say that I want all of my payments to go through all the time, right? I mean, if anybody would like that, but it comes at a cost. Like once in a while, if you face an issue, like Kanu said, AML is one of the biggest challenges. There are other challenges like account takeover, right? Like, so it's easy to sort of socially engineer and somebody takes over your account and makes an instant payment, and instant payments are irrevocable, right? So you can only try for a recall, reach out to the beneficiary or someone, but once you make an instant payment, you can't get the funds back unless there is a concerted effort from the beneficiary bank and the beneficiary themselves comply, right? That's the inherent risk, right? So then that's why when you said that why don't I allow huge limits on instant payments,
Yep.
it's because of this risk, right? So the technology is the same whether you send $1 or $1 million, right?
Yeah.
But the reason is that inherent risk between values, and these are arbitrary numbers, but that's why they keep increasing these limits. In fact, you would see that a lot of banks have different lanes, as you said. So let's say the payment scheme allows $200,000, but for corporate customers it's up to 200. For individuals it's up to 10,000, right? Something like that.
Something like that.
Yeah, and then going back to your sort of other point around, how is like AI sort of changing this, and what the experience is still broken for some cases, right? Absolutely. Even we have employed such models already. In fact, we build like a scoring mechanism whenever you add a beneficiary, right? So even before you make a payment, you add a beneficiary. So like Kanu said, you check whether this makes sense from a business to business sense, right? Why are you sending money to some industry that you don't have any dealing with? And then you figure out whether that beneficiary is legit or so on. That's definitely one. You also be proactive in terms of sharing the information that you can share to your partners, be it other correspondent banks in the chain or any other PSP or somebody else, right? So that that information is readily available to make sure the customer experience is not broken when a correspondent asks for a piece of information, right? So there's a lot of coordination that goes around to make like a large payment happen, and there's a lot of manual intervention, right? So you can eliminate a lot of it through these AI models plus having the right kind of SOPs. And I think the other part that really solves it, and that's through technology to a large extent, is how do you enrich that information that payments carry, right? So today a Swift, typical Swift payment, if you look at that payload, it'll look like a piece of code, right? It's huge. There are so many fields, so much information can be put there. For a lot of these domestic instant payment rails, it's not the case. So you can only have like so much information. There is standardization in the industry to move towards like a global standard. But as these payment systems evolve, if the payment themselves can carry most of the information that is required to do these checks, right, then you don't need to be having this back and forth conversation about the legitimacy of the payment, right? And a lot of the fraud risk also inherently goes away if the payment itself carries that information, right? Which is not the case in a lot of cases. In fact, the correspondent network is broken at times wherein you sent like 10 data points, bank A receives 10, but when they send it to their correspondent, they receive 8 and then 6 and so on. So bank C again comes back to bank B and then bank A, and then this keeps happening. So how do you make it standardized and like richer and so on, right? So that solves a lot of these problems as well.
So this always reminds me of what we did on the trading side when I was at Goldman Sachs. Yeah. And Goldman didn't build this, right? But the industry itself built something called the fixed protocol, which I'm sure you're both familiar with. Yeah. For sure. Yeah. Now that I remember where you both have used to work, you understand what fixed is, right? So there was never this problem where like you sent a field that didn't exist because you couldn't do that, not legally, but just like there was no way for anybody to accept it. And if you wanted to get your orders done, and if you wanted to get them done electronically, which they all were done electronically, at least when I was there, you had to use the fixed protocol to connect.
Yeah.
And that was global. So it meant
Yes.
the fixed protocol was adopted in London, in Tokyo, in Hong Kong, in New York, in Switzerland, everywhere. And I just don't know the answer to this question. You both probably do. But is that what you're suggesting still hasn't happened yet in the banking system? That's why sometimes these payments break down, because some information that's embedded into the payment isn't known by the person who's receiving it or by the person who's sending it, if that makes sense?
Actually, that is true. So what Abhishek was saying, right? So one of the most common um, needs of the industry is that the receiving institution knows who the ultimate remitter of the money is. Right? So
Yeah.
as a fintech, if I'm allowing an exporter from, again, let's say Mexico, to send money to Hong Kong, the Hong Kong receiving institution wants to know who is this person who's sending money to my client, right?
Yeah.
And the way I do it is what is called payment on behalf of, or very commonly it's known as POBO in the industry, right? And yeah, so
I like it.
so what we do is we encode the sender details. Now there is a fixed field in Swift messaging system where you can encode it, and generally most large corresponding banks will show it. So Swift, I think the success rate is close to 99% where they would see it. But now when we move to real-time networks, right? If I take that money and then try to deliver it as through chats or FPS schemes in Hong Kong, then
Yep.
I can encode the information and send it, but it depends on the receiving banks, how they interpret it. Now, what you would see for the same country, like in India, if I send this information, the sender is such and such, one bank would put it in the reference ID. One bank would put it in sender, but with some prefix and suffix. One bank
no.
would not put it anywhere because they don't know how to consume it, because there are no fixed standards for the local systems yet. And that's something fintechs like us want to solve, to create transparency, right? So in any transaction, we want to know who the ultimate remitter is and who the ultimate beneficiary is. At least like on TazaPay, for every transaction, we know it, and we can produce that for both sides of financial institutions and make it super transparent.
Yeah. Just to add to that, right? So
Go.
it's not for the lack of trying, I would say. So like
Yeah,
the
this is what
Swift
I was going to ask you.
standard
Go
is,
ahead.
yeah. So the Swift standard is like, has been there for ages, right? That's the
Yep.
equivalent of the standard that you were talking about. It's been there for forever. It's the MT sort of messaging system. So very standardized fields, and every bank in the world understands it. But as instant payments evolved, they adopted the ISO standards. So there's a specific ISO standard which generally cards use, and then the instant payment systems also adopted that. Now globally, now there is a new ISO standard. I mean, not new, for the last 10 odd years it's been there, ISO 20022, which is being adopted by all Swift networks. So Swift has a huge sort of project ongoing. Most banks have moved to the ISO standards, and a lot of instant payment systems are on that, right? But like Kanu said, a lot of instant payment systems are on another protocol. So they don't have a corresponding field, or their interpretation is different. There's always this lack of like information that gets lost somewhere in the chain, right? And that causes a lot of issues. So a payment that would otherwise be very simply settled would raise questions, and then that delays the payment and so on, right? So yeah, there is concerted effort throughout, but I think it's going to take some time to get everybody on board and so on.
The two of you are way too good at this, and you just keep raising more questions for me. Do you mind? Can we go back to this idea of, and I loved this terminology, certainty and transparency. And you kind of hinted that there was a conflict between these two things, right? Like, I just want to know where my money is, right? In the same way when, I give my keys that I want to send to my business partner, I give it to a Grab bike. I can look on the map to see where he is, know that he's almost there. When he finally delivers it, he takes a picture of it, sends it. Like, I have certainty.
Yep.
And I kind of have transparency if I believe what's happening on the map. But there doesn't feel like, to me, like there's a conflict there. But is there in the banking system? And is that some of the reason why that there's, I mean, people do worry about fraud, and we talk about money laundering as well, but is there a conflict between this, what is the word used, the certainty and the transparency?
I think it's a really good question. It's not necessarily conflicting, but it can. Because what happens for transparency, you always want to know, like I said, who the ultimate remitter is, who is the ultimate beneficiary, and what is the purpose of this transaction, right? This is transparency for the ecosystem. And it should make sense that a garment manufacturer is paying a garment supplier.
Right.
Makes sense, right?
Yeah.
So that should always make sense. Now, what happens for real time instant, especially if it's a financial institution working in another financial institution to move money and settle these transactions, they may not always necessarily have the right tech connectivity or this information easily available in a shareable format. So, just to drive speed, they will omit some of the information. And that's where it breaks, right? Because you wanted to move real time as fast as you can, but then you've got to pause and say, hey, give me the rest of the information. So that's where it may be a conflict, but there's many ways to solve it, right?
Yeah.
And that's what people like us are trying
Yeah.
to do, where we've set standards, we have enough tech in place. At onboarding, we make sure both sides understand, and then we've got hard codes where you cannot even initiate a transaction. So customers start getting worried once funds leave their bank,
Yeah.
right? So
Yeah.
if you haven't given your key to the Grab driver yet, you may be frustrated, it's delayed, but you're not that troubled.
I'm not nervous yet, for
Yes,
sure.
because the keys are at
Yeah.
least safe with you. So I
Right,
think
right.
what we're trying to do, and especially what blockchain is enabling, is something really, really important, which is we are moving away from pre-funding to per transaction funding. So I'll give you an example. For example, we've
Please.
launched payouts for a fintech bank in the US called SoFi. Now, what they do is they use us to do instant payouts in 10 plus corridors in the world. But when a customer initiates a payout, let's say they say, I want to send $500 to my family in Mexico, we would return the FX rate and they would send us the KYC. And when both of us feel that it's good to go, then they say send. And at that point, I tell them I need X digital currency, which could be Bitcoin or USDC. Then they give me that money and I instantly deliver Mexican currency to the recipient. So, what I'm saying is, after all the checks are done on both sides, only then I ask them to send me any money at all. And only then they debit their customer versus the old days or existing days where the money gets debited, then along the way we are figuring out, should I send it to the next step or should I not? So
Right.
where we are moving to, check everything, say okay, then debit per transaction, so nobody's money is stuck anywhere, and that changes the game.
I have a lot of questions about FX, if you don't mind.
Of course, go ahead, that's our bread and butter.
What happens when the FX rates move, right? So let's say I'm just going to say on the phone as a proxy for in communication with somebody who's doing this, right? And you say it's a per payment transaction, right? It's not pre-funded, because I want to get to the pre-funding as well, because I think there are some interesting things going on there. And you say, okay, you're going to send money, like you said, from the United States to Brazil, let's say, or to Mexico. I don't know how that pair trades.
So that's where programmability comes in, right? Based
Go
on
ahead.
currency pairs, we have pre-decided how many seconds we lock. So on G7 currencies, I could give you slightly longer locks, but on
Sure.
G20, much shorter, right? So that's my treasury management. And I decide, and these are predetermined conditions when we launch with another financial institution, that these are the locks we
Right.
can provide. And if within those seconds the customer doesn't confirm, then the rate will refresh and they have to reinitiate.
Got it. Okay. Makes perfect sense. Can I ask about the pre-funding, though? And maybe this is not the same pre-funding that both of you are talking about, but I thought this was super interesting. Without mentioning the names of these companies, right? If I want to send dollars from the United States to yen to someone, to my family in Japan, sometimes the money doesn't even move, right? Because what some of these companies have done is they just keep balances in their own accounts.
Yes.
So I say, here's my money, right, which I leave with them, but they never actually move that money from the United States to Japan. They just maintain a balance in Japan, apply some very effective FX rate to it, right? So they're not making a ton of money, because I used to trade FX, right? So I know what those spreads are like anyway. They're always, particularly on, like you said, on G7, those spreads are super tight. I know, because I've done like almost $1 billion FX trade, and the guys on the FX desk were laughing at me. They're like, "You trying to move the market? Because this is nothing," kind of thing. I'm serious. I did a $750 million yen dollar trade, and I was doing it in bits and pieces because that's what my boss told me to do. And they're like, "Can you just tell us the full size? Because it doesn't matter. The rate's not going to change." But my point is, I know the spreads are tight, but like, when you talk about pre-fund, are you saying that like some of these companies are still doing this thing where like they leave the yen in Japan, and when I want to make a yen payment, they never move the dollars. They just keep those dollars there to increase their dollar balance, and they draw down their yen balance and then replace it with somebody else who's doing the opposite trade. So they're not making money or losing any money. And in that case, particularly with G7 currencies, the FX rate doesn't matter at all. No?
But you know, how much pre-funding can you maintain? I'll give you one statistic actually, which is very
Go for it.
startling. On any given day, approximately $30 trillion is just sitting in pre-funded Nostro accounts globally.
Oh my God, I just got goosebumps.
Exactly. And think about that cost of capital. So yes,
Yeah, I know.
at a high level, you're saying, you know, I can optimize, I can net. But when you think about the actual cost of capital, which is real businesses' money just stuck for this pre-funding, it's super inefficient. And this needs to change. This can drive so much efficiency and reduction in cost of capital if you don't keep this pre-funded.
So what should happen to that money if it's not pre-funded? So you're suggesting that the better way to do this is a transaction by transaction basis, locking in those FX rates on a sort of second by second basis.
That's only possible with digital currencies because they move around the world in real time.
Okay.
Right. I mean, I think this is exactly the pre-funding that we were talking about in the beginning as well, right? So the like you said, the FX spreads are not as much between the top currencies, the G7, but the cost of capital, like Kanu said, the liquidity cost, the money that is being parked, and a lot of times corporate funds are also parked to fulfill these client obligations, right? So you park upfront in the expectation that today I'm going to do these many yen payments in Japan, right? So you pre-fund using that in the hope that the customers follow this trend, right? So even for companies that are in this business, it's a huge cost. So if a provider is charging you, let's say 30 bips, which might seem like a great rate for like a top currency pair, the FX that they get is probably 3 to 4 bips, right? At a very large institutional level. So rest of it is like cost of servicing and this cost of this capital, right? That is baked into the price that you and I are paying. This has to sort of evolve, and like you need to be I don't think overnight we'll move to more real time, funding and everything. But I think the companies also need to be smarter about the way they think about pre-funds, right? And some of it can be solved through obviously the blockchain, but also by predicting better. So how does AI play a role, right? So today companies would have rules like, okay, every day park 10 million in my US dollar account because that's what I do on average. But that's not true, right? On holidays you will not do as much, but the buffer is too high. You put 30 million on a weekend because there are 3 days, right? But on peak days it'll be much more, on some days it'll be much lower, and so on. And how do you ensure that there is a backup mechanism for real-time funding if your liquidity is like sort of shortfalling, right? I think these are the challenges that every fintech faces, and the ones who are able to solve this in a smart way, they are the ones that give a better offering to the customer, better rate, right? Because you can just cut rates by like it's a race to the bottom, but you need to be smarter about your own operations.
So I like to talk about this, and I'll get past this in a second, but I just think it's two things I think are really interesting. One is both of you said BIPs like it's a word that everybody uses. We should probably define that for people that have not worked in the financial services industry. Yeah. A basis point is a percentage point of a percentage, right? So 3 BIPs is 3% of 1%.
Yeah.
Just so people can understand what that means. But yeah, I get it. And my ears love hearing the sound.
I think easier way to put it to people is 0.03%.
0.03%, yeah.
Oh my God, no one's going to understand that, but I'll let you live with that. And one of the things I was going to say was, because I used to talk about this a lot, particularly like 5 or 6 years ago when people were talking about Bitcoin and how much Bitcoin was trading every day. And I'm like, do you know how much money trades every day in the FX markets? And I was going to say $6 trillion. But before I said that, I realized that was probably like a statistic from 7 or 8 years ago. So I just double checked it while you guys were talking. It's closer to $10 trillion now, which makes sense.
Yeah.
Yes.
Yeah.
Particularly if there's $30 trillion sitting in pre-funded accounts. Abhishek, you said kind of in passing, this is one of the things that blockchain solves. How does blockchain solve these problems?
Yeah, I think I think Tanu also alluded to this. The digital currencies or like money movement on the blockchain, right? You can take any digital currency like a stable coin, USDC, USDT. That moves truly 24/7 movement, right? So instead of the fiat real time, which is essentially a pre-funded account, and the only one leg is happening real time. The other leg is like just like showing to the customer that your money has moved, but in a sense it's just one leg. Whereas in case of blockchain, the money movement is truly real time, right? So the coins are moving from one account to another 24/7 across the globe. What that does is you can do multiple pre-funds, right? You don't need to send 5 million in one go, because there's no other way to send 5 million rather than a swift transaction. You will make that 5 million transaction every morning, so that it lands at the time that your operations in that country starts, right? So for every treasury team that works in a global fintech, this is like a ongoing thing, right? They monitor payments, they release
Yep.
payments, but that goes away, right? So you can do smaller sized funding transactions, same for drains, but also you can be much smarter about it, right? So what time of the day do I expect more volumes? When is the peak? When is the sort of lean time, and so on, right? So all of these programmability comes along with the sort of blockchain based money movement, which is not there in the fiat world, right? You can put rules, but the under the hood, the money movement is still very old school.
So maybe
So
maybe
this
I
gets back to
can.
this idea. Sorry, go ahead.
Yeah, I was just going to add that what we are talking about, we are actually doing this for real now, and because when we started building TazaPay, this was happening, and so what we've done is our entire banking infrastructure is built on banks who've been stablecoin friendly right from the beginning. So somebody who built out fiat systems, for them to move to this, I think is very, very hard, because many banks, even some of the largest global banks, are not supportive. They will not let you do off ramps into their accounts. But the way
Yeah.
we've built it is talking about no pre-funding, right? If I have to move money, and I keep taking this example of Latin America to Hong Kong because it's a big trade corridor with what's happening in
Yep.
the macroeconomic situations. It's growing, and it's also the longest Swift corridor. Like, it still takes 5 days if you want to send a Swift from Colombia
Does
to
it really?
China, right? It can still take 5 days because there's so many hops of correspondent banking, and especially if you use a small bank, you're screwed. So, but what we do, to explain to you exactly, right? If I am
Yeah.
collecting Colombian pesos, I will on ramp it to a stable coin, US dollar denominated, USDT, USDC, there, through a licensed partner. And I will take the same stable coin, instantly off ramp it in Hong Kong, and deliver it to the customer. So all of this can happen in a few seconds without me having had any money sitting in Hong Kong, which I needed to use to release. Right? So that's the difference.
Yeah.
But
And
where do
just
the Can I just ask this though? Where do the regs come in here, Reg? And Abhishek said this too. The stablecoins operate 24/7. But we talked about, I want to go back to these words, the certainty and the transparency. And part of the reason why at the beginning of this conversation, when I posited that like real-time payments are already a thing, and both of you pushed back a little bit and said they are and they aren't. But in this case, if you're on-ramping it and then off-ramping it, or sending it from, like you said, in Colombian pesos to Hong Kong or to wherever, it only takes a couple of seconds. But when does all the other stuff happen? The AML, the KY, all these
So
other
all
things that
of
we
this
were
is
talking about.
happening behind the scenes. So we've integrated with like 20 fraud and risk management platforms, right? Third party as well as proprietary.
Yep.
All of the sanction screening will happen. We are fully travel rule compliant. Travel rule for general people is the standard for moving digital currencies, because when you move money from a bank account, generally the sender information comes through, right? Because you will know that ABC sent me this money, and that ABC was KYC'd and onboarded by the sending bank. That doesn't happen on blockchain. It's just a wallet address. So the travel rule, which governments around the world, regulators around the world are implementing, is that the sending financial institution, which is us in this case, needs to
Yep.
send sender details when we move digital currencies. So we are fully travel rule compliant. And this all happens in real time, right? When we are sending, so the data flows with the money. Then we also do pretty detailed chain analysis using third-party platforms. So we know up till the last 10 hops where that money came from. If there are any hits, we would reject it. But like this, all of this happens in real time, right? So obviously, what we rack up is data costs, but uh,
yeah,
all of
yeah,
this has
I
to
think that
happen. One single hit, and you have to stop it.
This is why I love technology. Sorry, Abhishek, I interrupted you before as well. Go ahead, please.
no, I was saying that's what I was saying about the enriched data and the payload itself, right? So for
Yeah.
fiat world, like to do that, you need like hundreds of central banks to agree, hundreds of payment systems to agree, and so on. But on the blockchain, like some of these principles have been established already, right? So now it's up to you how much you can leverage that information and how accurate you can be. And like you said, technology can solve this and is solving all of this. I just want to add one example of this, like sort of stable coin based payments. And I mean,
Please.
we've been talking about the money movement, bank transfer equivalent, but even on the card side, right? So I think there's a lot of movement there. In fact, some of the largest networks in the world, they are
Yeah.
becoming more and more stable coin friendly. They're
Visa,
allowing settlement
MasterCard, all
in
these
stable
people.
coin.
Yeah.
Absolutely. So we are actually, working with Visa. We are a principal member to like reduce our pre-funding requirements by using stable coins as a mechanism to settle with Visa, right? And they are definitely like pushing for this, and they are very pro, stable coins being used because there's a real tangible benefit to everyone in the system.
Sure.
So yeah, but yeah, a lot of regulators and a lot of banks have to catch up. Like Kanu was saying, some of the largest banks in the world have taken like contrarian stance, right? Some of them are very pro stable coins. They are investing in it or launching their own coins
Yeah.
actively. Others have taken a very conservative stance until regulations are super clear. They don't want to move forward. So yeah, I think the space is very exciting. It'll keep evolving pretty quickly.
I mean, we did an entire episode of the EduTech podcast with Naveen Malella, who recently left Connexus, right? So we
Yeah.
just had a whole conversation about stablecoins.
Yeah.
And that was fascinating. But what happens, and again, we don't know the answer to this question, but again, just because we're chatting about it, what happens, do you think, to the big institutions, but even the sort of mid to small institutions that are saying right now, I don't want to be involved in this sort of blockchain space because even though it's becoming more and more mainstream every day, like we can talk about it like it's normal, but to them, it still feels a little bit scary. But at some point, if the world is going to be driven by activity in stablecoins, because it does make payments just way easier to do and way more kind of frictionless and seamless, like catching up is just going to be really hard for them, no? Even if it's a large institution. So if big bank A is doing stuff, but big bank B is just kind of holding back and going, I don't know.
So
At some point, they're just going to get left behind, I think.
I think that's very valid. And funny thing is that many large banks, which were not thinking about stablecoin and digital currencies, have already in a year moved, right? Since the Genius Act, it's like a
Yep.
changed landscape in the US. Um, I go to Money 2020 in Vegas every year. So in 2024, um, most of the big banks, American banks, were staying away from stablecoin
Yep.
companies. Those same banks last year in 2025 had sprung up
Launch
whole
them.
teams. I got business cards. Hey, I'm the head of digital currencies at XYZ Bank. And I'm like, oh,
Right.
you have a team. So it's
Yeah.
changing. But having said that, I think there'll be hundreds of thousands of banks who will rely on infrastructure providers like us. So that's how we think this is going to scale, right? Fintechs who are building the infrastructure with the agility of blockchain and fintechs, but controls of the
Got it.
bank. So as long as we build solid compliances, which banks feel
Yep.
comfortable, then they will rely on us. So a lot of conversations they're having with banks is like, you do the stablecoin leg, just sell to me in fiat. So my customers who need digital, I'll send them to you. You figure it out, you do the travel rule, you get the requisite licenses, and I'll continue to do the fiat. But
Yeah.
customers will have access to both. So that's how we think players like us come in.
So they're going to lean on you for the tech, right?
Yes, and that's the future, I hope.
Do you think that, and this is a question I've been asking for years, but I'm curious if this has changed. Again, as stablecoins become more prevalent and money moves a lot faster, at some level, the regulations in, pick a country in Europe are going to have to look like the regs in the UK or have to look like the regs in Asia. And Asia's a big deal. Like it's fragmented for sure. But do you think these regulations are going to have to normalize? Because at some point, right, if stablecoins are super cool in like America, but they can't get into Indonesia, let's say, and I'm just picking a random country, because of the regulatory environment is so different, at some point, do all those things have to normalize, or you think it's going to still stay the same way it is?
The regs are moving very, very fast. You see, Europe has already got MICA, which is standardizing across Europe, right? Everybody has to
Yep.
and follow. We are going to do it. US is even talking about Clarity Act. At some
Yeah.
point, that should come out. Singapore, of course, led the way. the DPT has been
Of course.
pioneer, right? So that's why this is like gold standard, which is
I
driving
love
the way.
Singapore.
And the region here follows Singapore, most of them. So you see,
Fair enough.
Vietnam has come up with regulations, Indonesia has come up, India, we hear, is coming up with some recs soon. So there are very few countries, like obviously China is a blind box. Nobody knows what's going to happen, but apart from the CBDC. So, but UAE has a pretty decent
Yep.
regulation. We've applied for license there.
Yep.
Latin America is a little bit far behind in terms of regs, but I think they have to play catch up. And until there is clarity, people will continue to operate. So at some point, when the flows become large enough, I think regulators have to. And sometimes, the regulations, what we've seen, even when back in the day I was at PayPal for many years, and
Yep.
when PayPal started cross border, there was no regulation for payments. Like there was no Payment Services Act, there was
No.
nothing. And believe me, like a lot of these regulations were, and PayPal was so big, serving hundreds of thousands of SMBs in each of these ASEAN markets. When regulators started making payment acts, they were thinking how to fit the PayPal model. In some countries, you'll see the reporting is kind of aligned to how PayPal's business worked because that was the gold standard of cross-border payments. So, if stablecoin or digital currency flows become large enough where it's part of your GDP, then regs will have to come in a way that they support. That
Yeah, this is my point, is that I think it's going to have to be inevitable, because you're right. As it becomes a larger and larger portion of your GDP, look, what are you going to do? Slow it down? It doesn't make much sense to me. Sorry, go ahead.
No, I mean, exactly what Kanu said, right? But we have seen this, in fact, happening. If we just take a step back, so even the instant payment systems, whenever they were launched, like probably let's say 10 odd years back, only banks could participate, right? But over the
Yep.
last 10 years, a lot of fintechs operate directly in the payment system, right? So you don't have to rely on a bank to do instant payment systems in a lot of markets. Fintechs can do that. That regulation changed because you see the value that a lot of fintechs bring into the ecosystem, right? Because they can move faster on technology. In fact, I know like players who have done this and demonstrated to central banks how efficient their systems have been, what their uptime looks like versus the largest bank in the market. And you would be surprised that fintechs are sometimes called by regulators to not teach the banks, but demonstrate how to run an efficient payment system 24/7, right?
Yeah, not shocking.
And I think stable coins, digital currencies, they were on the other side of the spectrum where it was treated only as technology, not so much in the financial services space.
Yeah,
But
yeah.
as the overlap is increasing, I think regulators also understand that it's more core to the central sort of monetary system, and how do we create policies around it, right? And like Kanu was saying, like every market is moving pretty fast. There would be like pretty stringent and clear regulations. I think both are important to weed out the bad actors. And also, I think there is a perception in the industry, right? A lot of bad actors are still operating because of the ambiguity in the regulation. So I think that needs to go out for the larger banks to be sort of fully invested in this ecosystem. And also, there needs to be clarity for everybody to move in the right direction.
Yeah, I mean, historically, there have always been bad actors anytime that we've reached an inflection point, right? Because the regulations can never catch up with the technology
Exactly.
or the new business models or the ideas. We see this all the time. This is not new. And this was true when they were trading stocks on the street on Wall Street, in the 1800s. So it's all the same thing, just on a different surface. One of the things we talked about in the open was turning payments internally into like a profit center. How does that work? Do you know what I mean? We're like right now, if I'm a business, go ahead.
This is like the bread and butter for an infrastructure provider like us, right? That's our
Yep.
goal, to allow platforms to actually monetize payments rather than think of it as cost. Now, I'll give you an
Yeah,
example, right? We have we work a lot with mobile gaming companies or console gaming marketplaces.
for sure.
So let's say we have a customer G2G. It's a marketplace where small businesses, individual sellers sell gaming credits, vouchers to consumers. Now, in this case,
Yep.
we have the flexibility on our APIs where we give them a cost and they can quote price in various FX and eventually settle in one currency, right? But using our APIs, they can get a quote on every FX that they offer, every currency, and then they have the ability in real time at every transaction level to do a markup. So they could add couple of percentage of
Bips.
percentage, yes,
Couple of bips.
couple of bips to every FX transaction that goes on their platform, and based on currency, based on transaction size, based on the seller profiling, they can build complex or simplified models, and we give them the full flexibility to do this, right? So that's a simple way where suddenly payments is not a cost center for this marketplace. In fact, that is their biggest monetization. They don't have to charge commissions to the sellers. They're just monetizing on FX. So that's like one example. There's multiple, right? So our API is fully flexible, and they can monetize on FX, they can monetize on transaction fees, they can monetize on payouts, they can basically decide how they do it. But all large platforms eventually move to payment monetization.
Yeah, I mean, they can just say that the payment itself is free, but they put a VIG on it or put a spread on it to make money in another
You're an
way.
FX
Yeah, I
trader,
get it.
you know how that works.
Yeah, I know
And
it works.
very honestly, if I may add, I personally don't agree to this take, which is like a common statement that payments are a cost center. I mean, I've worked in payments, managed payments for like very large global fintechs in the past. Aspire also, we are now pretty global in that sense. I think payments by themselves also make money, right? But there are two ways to look at payments, right? So your domestic payments, which you don't monetize, that's like the heartbeat of any sort of business, right? If you give a perfect experience to the customer, then you monetize everything else, the whole relationship with the customer, right? And on cross border and FX, the idea is not to go into a race to the bottom by just undercutting, but it's to be more efficient yourself, right? So if you can reduce your costs, then you can pass on those benefits to the customer and still make a lot of money. For us, the payments vertical is profitable because we do make money even with like some of the most competitive rates in the market, right? So I personally don't agree. I sometimes feel that payments are treated not in the same lens as some of the other verticals in fintech, but I think payments are pretty good as a strong monetizable pillar of any fintech business.
Okay. I think both of you would be surprised that we've been at this for over 50 minutes. Which is awesome. This is exactly what I would have expected from both of you. You've been insanely great. I just want to ask the last kind of question, if you don't mind, right? And hopefully you've thought about this a little bit. What is the most contrarian view either one of you has about the future of payments, where you think that like nobody else is thinking about this, or if I say it, people may think that, you know what I mean? It's super contrarian. And why don't we start with you, Kanu?
Sure, I did think about it, and
Go
I
ahead.
think
Yes.
one thing that everyone says, and I'm in the cross-border payment space, everyone says that payments are getting commoditized and are going to soon be consolidated, and I don't agree. I think neither of that is
Okay.
happening, right? Firstly, the pie is very big. Secondly, it's super nuanced. Thirdly, geographical differences and compliance requirements are completely different. So B2B player who's interoperating between stablecoins and fiat in the US is doing something completely different compared to what I'm doing in Asia. And that same player comes to me and says, hey, let's partner. Can I
Right.
borrow your Asia rails for my customers in the US? And that's happening
Yeah.
everywhere, right? So
Yeah.
there's so much room to evolve right now. Fintechs probably have less than 10% share in the global money movement. And every year, 2 or 3% of that 200, $300 trillion industry is moving to fintechs, right? So there's just so much scope and so much room to continue to innovate and take away those capital cost of capital that I don't think consolidation or commoditization is happening anytime soon.
Got it. So Abhishek, before I get to you, I want to make a comment about this. I've been to Money 2020 all over the world. I haven't been to Vegas, and obviously I've been to the Singapore FinTech Festival. And I remember the first time I went to SFF, and I just thought to myself, why are there so many payment companies? Like, it doesn't make any sense. They're just going to eat each other. That's really what I thought. But that was an uninformed opinion. And the more I've gone and the more I've done this, kind of have these conversations, the more I'm on your side on this thing. There's no way that one of my friends moved to New York. She's German, married to an Australian, whatever, but she was living in Asia for a while. And she moved to New York, and when she wanted to put down a deposit on her apartment, she had to write a check. And she's like, "You must be kidding me."
Seriously.
Yeah, I'm dead serious. She was just like, "You must be kidding me. What are we doing here?" So you're right. It's so different all over the world. And if you're building a payment system, and again, I'm just going to use like the US and Indonesia as proxies for like just how different places can be. There's no way you can get enough expertise to build a payment system in Indonesia if you've just been building in California your whole life.
No, that's
So I
true.
agree
You
with
look at any global player, any American or European player, they have
Yeah.
not done well in Asia.
No idea, 'cause they have no idea.
None of them is a success story here. That's why we started. I was at PayPal and then Stripe, and then we were like, we have to solve this market.
Yeah, exactly. So Abhishek, what's your thing, your most contrarian view on the future of payments?
Yeah, I mean, I don't know whether it's contrarian or not, given the current sort of landscape, but I fundamentally think that any user, right, be it a merchant, an individual, a large, they don't really want to do payments, right? Payments is inevitable because everything that you do, any exchange of goods, services, anything, payments
Yep.
are a part of it. But I don't think fundamentally people love payments. They want to do payments, right? So I think we would reach a stage, and pretty soon, because of two things. I think the blockchain is evolving pretty quickly, and stable coins with all the regulation, that's one. Even the AI sort of side of things, and we did not speak a lot about it, but like the sort of MCP protocol with Anthropic,
time.
a lot of agentic sort of
Yeah.
flows, right? So all of that, I think very soon payments become pretty invisible. That doesn't mean that payments go away. They are always going to be there. It's the integral part. But like for a user, for a business, I don't think they need to think about payments, right? The intelligence around payments is built by companies like us who ensure that the payment takes place invisibly in the best possible manner, settles the fastest, you get the best FX rate, you ensure that all the regulatory obligations, financial crime reporting, monitoring, everything works perfectly well, and then the transaction just happens, right? So the customers focus on what they do and the payments happen in the background without people's intervention, people thinking about it, right? So I think that's my contrarian view. People are still building UI for payments and all that. I think that goes away pretty quickly with the advancements that we are seeing, right? So that intelligence will be abstracted very soon. And I
Okay,
mean,
you didn't ask me my opinion on yours either, but I'm going to give it to you anyway.
yeah,
I don't think the UI is going to matter ever again. I
yeah,
really don't. And we could do an entire show. Like I said, on the next episode, when we have you both on, we can talk about this. I did an entire episode on how agentic AI is going to be the user interface for all, like for everything, whether it's payments, SaaS, everything. So I don't disagree with you there either. They're not going to go away. This stuff's not going to go away. But why do I need to have a user interface that works for me when I'm not ever going to look at it because my agentic AI is going to do it for me? Anyway,
exactly. Yeah, just one last thing, if I may.
Go for it.
Right? So people are still building like the best possible API documentation for integrating and all of that, right?
Yes.
It has been going on for the last, let's say, 15 odd years, and the industry has evolved. Great, but I think that also goes away, right? The intelligence layer is with the agent, and you just need to integrate with the model, and then it decides which API to call for which rail and everything, right? So that gets abstracted very soon. It's already happening.
It's
I don't think but yeah, I think it's already happening, and that's the next wave.
So I did. I'll leave you guys with this, and then I'll let you go. But I did an entire monologue yesterday, the day before, on. I think it was actually, no, it was this morning. It feels like days ago, but I did it this morning for the show I do about the United States, and I started recording at 5:15 in the morning. But the whole thing was about AI.com and how they want to become the UI for SaaS. Anyway, I'll leave you both with that. I want to thank you both. You were amazing. I'm not surprised how great you were. Kanupriya, Sharda, Chief Business Officer at TazzaPay, Abhishek, Padhy, Head of Product Payments and FX at Aspire. Just insanely great. Thank you both for doing this, really. Thank you so much.
Thanks for having us.
Thanks.
Great chatting with you, Abhishek.